Majorly, yesterday, we were trying to discuss what we call time frame difference. Okay, and I was telling you guys that when we are talking about time frame majorly, that is time frame difference. That is, it's more. It's not just only unique to a particular time frame. All right, it is more of we just. It's more of we trying to relate it to a certain to trying to bring things to a reference point. Is that understood? So it is more like we taking a reference point. Okay, so not like necessarily, oh, if I say that 4 hour time frame is this, 4 hour time frame structure is this, it may not necessarily be that that is the 4 hour time frame structure. Okay, so it's more like trying to understand time frame in form of the uh, inductive approach and the deductive approach. So yesterday we were saying something. We said, let's say for example, we have a trend, okay, so that we have a high, a low, a high. Then this gives birth to more like probably a range structure like this, and then breaks above. Then we have this, okay, and we have maybe something like this again, and this breaks again, and probably we have more tinier one, this come like that, like that. Now, what do we have here is that what I'm trying to let you understand here is for the particular time frame that we are in. Okay, let's say for example, this time frame that we are in, that I want to take reference to, this particular time frame that I want to take reference to, let's say that is when I open my chart, the time frame I take my chart to, let's say it is a 22-hour time frame. Okay, it is a 22-hour time frame. So if that is now our 22-hour time frame, okay, if that is our 22-hour time frame, it simply means that the structural range, the major structural range that we have is the structure of that 22-hour. Okay, this major structural time frame that we have is the structure for that time frame that you open on your chart. All right, so that is from this low to this high is our structural range. A market breaks out of external liquidity, BOS. So which means from that low to that high, okay, from that low to that high is the what? Is the 22-hour structure. From that low to that high is the 22-hour structure. We are now saying where do we have the major internal structure of this guy? Although we'll still talk more internal structure mitigation and all, probably in our next class, which will maybe later be tonight. So we have this. So let's say we have this guy here that happened, okay, just before the external liquidity here was broken. That guy is this structure, this guy, let me box it, is the major internal structure. Okay, that is the major internal structure. And that internal structure itself is a lower time frame structure to 22 hours. However, it is the next bigger time frame after the 22 hour, that is after the original time frame that you are in. So this particular time frame, okay, that formed the internal structure, let us call it maybe 19-hour time frame structure. So let us call it 19-hour time frame structure. Now, after market breaks out of the external liquidity, you will notice that market forms some range structure that are already market forms some range structure that already have proper mitigation. They already have proper mitigation. So in as much they have proper mitigation, that is, don't worry, we are talking about mitigation in our next class, so you will understand better. But what I'm trying to say is that there is no other field there again. That is, this last structure has properly retest every area inside the previous one. This one too has properly tested every area inside this one here. All right. So if we have that to be the case, then what we now have is that after market now breaks out of this range structure, you will agree with me that this range structure is different from this range structure, okay? So market again breaks out of this. Let me use another color for that. Market again breaks out of this. We have this BOS, okay? So another BOS here, sorry. So we have this, okay. BOS again here. Now, after we have this new BOS, now this range structure that happened first, even though all of them are range structure, that is even from the time we break this external liquidity down to here, up to here, all of them are range structure, and all of them cumulatively are all range structure to this first external liquidity that was broken. Okay, they are range structure to that first external liquidity that was broken. Okay, so they are range structure to that first external liquidity that was broken. So in as much we have that to be the case, it means that we can say that this first range structure is another time frame structure. Remember, a range structure is in line or is in the direction of what? A range structure is in the direction of the trend. Okay, it is in the direction of the trend. It is not a consolidation. That is, you cannot have something like this, maybe a breakout of this. Market breaks this, and market now do this. This is not a range structure. This is a pullback. Okay, this is not a range structure because it is not in line with the direction. This one is this structure here is a bearish trend. Meanwhile, the normal trend we have is bullish. I hope I'm making sense. So majorly, a range structure is in direction of the trend. So a range structure is more like a lower time frame structure to a certain structure range. A range structure is a lower time frame structure to our major structure range. In this case, our major structure range is 22-hour time frame. Okay, our major structure range in this case is 22-hour time frame. So since we now have that to be the scenario, so what do we have next that could be the case? So the next thing we want to know is that what we have here right now is this. Look at it. We have our, let me erase this first. All right, so we can now assign that this time frame, this particular time, this range structure, first one, we can give it another time frame structure, which is this range structure too is, however, the time frame of that range structure is, however, a lower time frame to a what? To a 19-hour time frame. Remember, the major structure range is 22-hour. The internal structure is 19-hour. Then definitely our range structure is a lower time frame to even internal structure time frame. I hope I'm making sense. So that is the idea of the time frame difference. So let's say that one, its own time frame is, let's say, 14-hour time frame. Now, the meaning of all this that we are writing is that is, if you go to, for example, the implication of this is that if you leave 22-hour time frame, okay, and you go to 19-hour time frame, it means that this structure here that we call 19-hour time frame, even when we were in 22-hour time frame, that structure will appear as a major structure range on 19-hour. That is why we call this 19-hour time frame structure. I hope I'm making sense. So it means if you go to that particular time frame that you are calling your internal structure time frame, it means that that thing that you mark as that time frame structure, for example, in this case, we mark this internal structure as 19-hour structure. You should go to 19-hour. That structure that you mark, that you circled or that you box, must appear as a major structure range on that particular time frame that you label it as from the higher time frame already. I hope that makes sense. Okay, so same thing with this 14-hour time frame. Okay, same thing with this 14-hour time frame. For the 14-hour time frame as well, you must be able to go to 14-hour time frame and you must be able to see, okay, this structure here, this one that we mark as blue here, you must be able to see it as a major structure range on 14-hour. That is the implication. I hope I'm making sense. So that is it. So after market breaks this structure here, now the next variant structure is formed that has proper mitigation. As I highlight, let me give those ones maybe black. This next one here, black structure. After this, that is, this BOS simply means 14-hour structure has been broken. This first BOS means 22-hour structure has been broken. This second BOS is what? 14-hour has been broken. Okay, that is 14-hour structure has been broken. That is what that next one means. That is, this BOS means 14-hour structure has broken to the upside. Now, we have two types of break of structure. We have continuation break of structure and we have reversal break of structure. We have continuation break of structure, okay, and we have what? Reversal, and we have reversal break of structure. What is continuation break of structure? If I have something like this, okay, this market breaks this external liquidity, creates a higher high, breaks this external liquidity, creates a higher high, and no. So this is a continuation break of structure, that is market breaks and continue. Okay. Now, what's a reversal break of structure? A reversal break of structure will not happen if I now have something like this. Market now breaks this one. Even if it is a minor BOS, as we will be talking about later, market breaks this. This is a reversal break of structure because in this scenario, we were bullish before. Market has now broken structure to bullishness and is now coming down. It may not, although a minor break of structure does not, it may reach here and still continue. We'll still understand all that later. But what we know here is that this minor break of structure that we have here is for a what? Is for a reversal. Is a reversal break of structure, not a continuation break of structure. Why all these ones here are continuation break of structure? Why this one is a reversal break of structure? I hope that is clear enough. All right. So now this next range structure, now 14-hour structure has broken to the upside. That is for continuation, for a continuation break of structure. Now this next one here, how can I put? Okay, thank you. Sorry about that. I've forgotten that this app that I'm using has on do some do not have. Okay. So this next one here that we have is a lower time frame structure to the last one that was broken. The last one that was broken was a 14-hour structure. Remember, the first one that was broken was a what? Was 22-hour. Meanwhile, its own internal structure is 19-hour, which means 22-hour structure end where? It ends at the lowest low, which is here. This 22-hour structure. It ends there. Is that understood? All right. So after market breaks 14-hour structure to the upside, the next structure that market form is a more lower time frame to 14-hour structure. Is that understood? The next structure that market form is a what? Is a more lower time frame to 14-hour structure itself. So let's call this guy here, let's call him maybe even a 6-hour structure. The difference can be that far. It doesn't have to be close. In fact, it can be a 1-hour structure. Okay. The major thing, the major clue, like I told you, is that you must be able to go to that particular time frame, the particular time frame where you can see the structure you are marking from higher time frame as a major structure range. So let's say it is on 1 hour that this one is clear as a major structure range, then definitely that means it is a 1 hour time frame structure. You know, here we are just trying to, I'm just trying to teach you the psychology behind it. All right. So after market breaks this as well, then we have another, let's call this one maybe BMS. It still breaks the market structure. After market breaks that one, so the next one we have another range structure here. You see that this one is tinier and more. So let's call probably this one, let's call it a 30 or 45 minutes time frame structure. 45 minutes time frame structure. So like that, if market breaks to the upside again, create another maybe range structure before this, like that. All right. So that is the implication. Now, how do we now trade this? What is the usefulness of teaching these whole things? Why do we want to understand structure at every step of it, at every base of it? Why do we want to understand structure based on that? Now, we want to understand structure based on all these things only because, a minute, please. We want to understand structure based on all these things that we have been discussing, majorly because, let's say we want to trade our retracement. This helps us, number one, to know our target, majorly our target. Number two, to keep following what? To keep following structure as structure presents itself. Okay. Number two, to keep following structure as structure actually presents itself. Okay. So that is another implication. Now, what do I mean by that? So let's say, for example, market came all the way down here to test 45-minute structure, create a high, but the high couldn't create another higher high, which when we'll be talking about shift in market structure, which is could be our shift in market structure, SMS. Okay, so market couldn't create a higher high and now come all the way lower. So let's say around all this 45-minute structure, we already have what we call proper mitigation. Proper mitigation simply means that all others there, they are closed. We have all others. All others are already fully what? Fully closed. Is that understood? All others are closed. That is the implication of the 45-minute, of proper mitigation. So, which means that the last possible place where market ought to create a new higher high ought to be this last structure here. But meanwhile, that last structure refused to create a higher high. It refused to create what? A higher high. So the moment market came all the way back and breaks everything, this guy here, automatically we already know that it will even break all the other ones. Why? Because all of them are properly mitigated one another. Is that understood? So we don't need when we'll be talking about mitigation majorly in our next class, like I said, you will understand that better. So the moment we have a reversal break of structure, now remember all the break of structure we'll be having a continuation break of structure. So the moment we have a reversal break of structure, BOS, now a reversal break of structure. Which structure do we break here? We broke 45 minutes structure. This is the idea of time frame difference, which means the structure we broke here is 45-minute structure. So if we say that we broke 45-minute structure, time frame difference let us understand that breaking 45-minute structure does not mean that you have broken 4-hour structure, does not mean that you have broken 2-hour structure, does not mean that you have broken 6-hour structure, especially in this example that we are using. So which means After we see that 45-minute structure has been broken, we can try to sell probably somewhere around there. After selling, where will we be targeting? The next visible structure. When I say visible structure, all the structure we have been able to what? To show on this particular time frame, all the structure that are clear enough that we have been able to label and analyze. So we know that if we are selling based on the details on this time frame alone, I don't even need to go to lower time frame to do all these things. Okay, if you check our syllabus, you will see a certain topic where we talk about just range alone. That is just this guy alone, from this low to this high, I can trade on it alone without checking any lower time frame or higher time frame to it, just with deep understanding of structure. So this is why we call this advanced structure. So this is not a normal structure view that you have out there. Is that understood? All right. So a reversal break of structure that we just have there does not mean that we are ready for does not mean that we are now ready to clear all the other structure. It only means that we are now ready to go and mitigate a more higher time frame demand. Remember, we have demand around all this place because this is an uptrend. Is that understood? So, which means based on other confluence that we'll still learn, let's say our confluence is saying that this is our next POI after we have confirmed our minor break of structure here. Okay, let me call it, it's actually a minor break of structure. After we have called it, after we've had our minor break of structure there, so let's say we have our confluence around there and we are able to sell from here. So selling from here, where we will be targeting, it means that we will now be targeting what? The internal structure of what? Of Caesar structure. Now, note again the word internal structure or Caesar structure, or that we'll be targeting Caesar structure generally. Remember, the last structure range that we have on Caesar structure is from this low to this high. Even though all of them are range structure, all of them are range structure to the 22-hour structure, right? And remember, a range structure is a lower time frame structure that is visible on the particular higher time frame where you are actually doing your analysis. Is that understood? All right. So 6-hour too, just like 22-hour, has its own internal structure that is 19-hour. You know that 19-hour is not a range structure. 6-hour too might have internal structure. Okay, price may come, but the only sure thing we are certain of now is that we can get to at least this high here. That is the secondary zone. When we'll be talking about primary zone and secondary zone, we can get to the secondary zone area of 6-hour time frame. That is the only sure thing we can probably talk about based on what this time frame is telling us. Because price may not get to this extreme or what we call sponsored candle. When we'll be talking about sponsored candle, I know some of you have seen videos on the sponsored candle. So price may not actually get to where? To this place, to the extreme of it. It may just come, but the major thing is that we know that we are targeting Caesar structure. All of them are Caesar structure. Either one of them is the internal structure of Caesar, because the internal structure of Caesar will be a lower time frame to 6-hour as well. Just like 19-hour is the internal 19-hour, just like 19-hour time frame structure is the internal structure to this 22-hour, as I put here. So internal structure of Caesar could be 4-hour, 3-hour, 2-hour, depending on where that internal structure is also visible. I'm taking this slowly, and I know that it is quite sinking into your head as I'm teaching it. It should be making a lot of sense. All right, so the moment we have a minor break of structure there, okay, so the next thing we want to look at is what? Now we have confirmed 45-minute break of structure. We can now gladly sell and target Caesar structure. Do we have to target Caesar structure? We have to target Caesar structure because the higher the time frame, the stronger your demand or the stronger your supply, as the case may be. So the reason why we even do call this a minor break of structure is because a 45 minutes break of structure, which is our minor break of structure, does not imply that there is total reversal here, because markets can come to the around the Caesar structure and continue from there to create what? To create a higher high, as I dotted now. Is that understood? Market can use the Caesar structure to continue the whole range structure of the 22-hour, that is, from the time we break from this external liquidity, all we have been having, all of them are considered as range structure. So market can use the Caesar structure to give a higher high for even a more bigger range structure or a more bigger picture. Is that understood? It can happen. So that is why we need to follow accordingly. So let's now say that the Caesar structure, after market get to the Caesar structure here, so let's say the Caesar structure was able to push maybe price this far. Let the Caesar structure push for price even all the way to this side, maybe induce this liquidity that you will still understand later, that we call primary inducement. Okay, so you will still understand that maybe it was able to induce this, but yet even the Caesar structure too couldn't create a higher high. So let's say from this PO high here, the Caesar structure to now came, was only able to push price all the way down there, and now came and then break. Then we now have a Caesar break of structure here. So the moment we have a Caesar break of structure there, what is the next structure we are targeting if we are selling anywhere? We are now targeting 14-hour structure. If 14-hour structure to go broken, then we can now start targeting the internal structure of our 22-hour, which is what? 19-hour structure. Because price can get to that 19-hour structure, that is the internal structure of 22-hour. Price can even get 14-hour and use it to create a higher high. So when price will do all that, you will know later based on other concepts that you will be taught. But for now, I'm just letting you understand what a time frame difference actually looks like. So like that, that's how price build up. Because price cannot get to this 19-hour this thing, probably it can use it to even induce more liquidity and may not create a high. Let's say we are now totally bearish. Maybe we want to have total reversal of trend. But those demand too, each of those time frame demand, the lower price goes, the stronger they are, because they are stronger this thing. It depends on the trend we have. If it's a bearish trend, the opposite will be the what? Will be the story. I hope I'm making sense. The inverse will be the story. All right. So that is that. So we can get to the 19-hour, use that to evenly induce liquidity. Let's say and that one to may come and mitigate somewhere around there. And then we can now start targeting. After the 19-hour structure is now broken, we can now start targeting the major low, the 22-hour low, external liquidity. Boom. Is that understood? So this is the simple analogy of what? Of time frame difference. Of time frame what? Time frame difference. Okay. Of time frame difference. All right. I'm coming. Give me a minute, please. Yeah, sorry guys. I had to do something. All right. So basically that is time frame what? Time frame difference. All right. That is time frame difference. All right, let me share my screen now. I'm coming. I'm going on to share my screen. Uh, sorry. I don't know. The minute is I'm trying to do something. Okay. Oh no. Sorry guys, please give me like 5 minutes. They just took off my light. I will need to switch to Jen. Yeah, I'm back. Please, can you guys hear me? Hello, can you guys hear me? I'm here. Can you guys hear me? All right, good. Okay, so majorly, that is what time frame difference is talking about. All right, so I will we'll go to the charts now. I will see what we have there. So let's go to maybe a certain chart. Okay. Any charts, maybe GBV card. Then let's start from let's say weekly time frame. Now, this is our weekly time frame, right? This is our what? Our weekly time frame. Now, since this is our weekly time frame, what do we expect? We know that our major structure range is what? Is weekly time frame structure what? Structure range. Okay. So let's go back and let's study accordingly. Let's go back and let's study accordingly. Okay. Now, what do we have? We have a low. Yeah. We have a low, a high. Okay. I'm coming. Let me we have a low, a high. Then we have a lower high. Sorry, a higher low, a higher high, higher low, higher high, higher low, and what? And higher high. Okay. Higher low and then higher what? Higher high. Higher low and higher high. Now, after market breaks out of this first external liquidity here as a continuation BOS, after market breaks out of external liquidity there, all these guys that you see, all these three legs that you see, arrange what? Arrange structure, which means the first major weekly structure is from this low to this high. Okay, because that is our first structure range. Then the next weekly structure after that, as shown on this chart, is from all this low right here, all the way down to where reversal happened to this high is the weekly time frame structure. Is that understood? That is the weekly time frame structure. That is the weekly time frame structure. Okay, that is the weekly time frame structure. Is that clear? So since we now have that to be our weekly time frame structure, which means let's now start counting. Okay, which means what is the internal structure? This guy here, all these one are the major internal what? Internal structure. Okay, are the major internal structure. So if we are using weekly structure, if we are using what? Weekly structure to treat our treatment, it simply means that our internal structure to weekly structure, our internal structure of your weekly structure is actually a daily structure. Is that understood? So which means this is a daily what? A daily structure. I'm coming. Daily. The internal structure is a daily structure. Okay. That is your daily structure. I hope I'm making sense. Now, after market now breaks out of the external liquidity, after market breaks out of our external liquidity here, okay. Now, the next time frame structure that was formed, the next time frame structure that was formed, all these are range what? Range structure. All these tiny ones, no matter how tiny they are, can you see them? They are range what? They are range structure. And based on mitigation, they already have proper mitigation. So which time frame structure is that? In as our internal structure is daily, then these guys here, we can call them like 4-hour structure. 4-hour structure. Okay, that is 4-hour structure. We can call them what? 4-hour structure. Is that understood? It doesn't matter how big it is or how small it is. Now, after we break out of the 4-hour structure again as BOS here, as another continuation BOS here, after we break out of this guy here, okay, we have another what? Range structure, which are these two that also have proper mitigation. Those guys right here, we can call them 1-hour structure. Okay, we can call them 1-hour structure, like that, like that. All right, like that, like that, like that, like that. Now, remember, I told you guys that the time frame where you can clearly see these things, on the time frame where you can clearly see it, is what matters. That is what I'm saying is that normally that is how we use it. Weekly, in the internal structure, we call it daily. The major structure first, we call it 4-hour structure. Is that understood? So after the 4-hour structure, 1 hour, after 1 hour, 15 minutes, after 15 minutes, 5 minutes, then like that, 1 minute. But however, something happened there. Okay, something happened there. This guy that you see, they are another major range structure. Sorry, I need to break something down. I think I did mistake. Sorry. From this low to this high is not the weekly structure. Sorry, it is very, very important. Sorry about that. From this low, there's already a break here to this high here, because we are in a bullish trend. A high, a low, higher, low, higher high, higher low, like in form of majors. In form of what? Majors. So this guy here, I'm coming, let me use this drive here. A low, a high, lower, a higher low, a higher high. Based on those are weekly structure, the one I'm counting now. A higher high, that is weekly structure range. A lower high, okay, and then it was I will rather go for this though. I won't want to go for this. Okay, I'd rather see this as a daily structure, but I will tell you why. Okay, so then a low, a high, a lower, a higher low, higher high, higher low. Okay, but majorly we can still count this. I can still count this if I choose. Remember, I told you it's just about reference. A higher high, higher low, then higher high. Okay, so the structure range from this low to this high is weekly structure range 1. This low to this high, weekly structure range 2. Okay, but I told you guys that this one actually I won't like to count it. So from this low again to the highest one again before reversal happens is weekly structure range 3. Don't worry, when I will be talking about market cycle and all, you understand why I clearly know that this is purely can be used is a weekly is a daily structure, okay? Because normally we do have what we call 3 drives. So major 3 drives, more like Elliott wave, wave 1, wave 2, wave 3, wave 4. That is wave 1, sorry, wave 2, wave 3, wave 4, then wave 5. Before you now have the peak. which is in form of M formation, and then complete reversal. Is that understood? So that is it. So we have broken down our weekly structures and we've known what they are. So we start again from where we stopped on that. I'm coming. We start again from where we are. All right. So for our weekly structure here, what do we have? Let's start again. We have a low, a high. Then we call this our daily, which is the major internal structure. Daily. The market breaks out of external liquidity. After market breaks out of external liquidity, the first structure you have is what? 4-hour structure, then 1-hour structure. Okay. Now, but majorly all of them, even though they are new structure range, all these guys you see here are still range structure to this last external liquidity. It's still more powerful than them. Is that understood? To the last external liquidity, the first major break of structure that we have here. Very important because that is our primary zone. When we're talking about zones, you understand better. So that is 1-hour structure. So then we have the highest high. So which completes the new weekly structure range from this low to this high. And then we have correction again. So this correction that happens here now is what? Daily. Isn't it? Daily structure. That is the internal structure of that one, of this correction that happened. This correction that happened, that pulled back towards the previous 1 hour, is a daily what? Is a daily structure. Is that understood? So market now breaks out here as BOS again, continuation again, daily structure again. So the next structure, what will it be? Remember, from the low to the high is the weekly structure again. From the low to the high is the weekly. So the after BOS, which means this one that I even call daily is not daily, is actually even a 4-hour what? A 4-hour structure. If I want to use the next weekly range as this low to this high, if I don't want to call it this, but I can choose to call it from this low to this high. It doesn't matter. The major idea that I'm trying to picture to you guys here is that once you pick your major time frame structure, like any reference time frame A, because even if I go to, let's say, this is 1 week, right? Let's say I go to, what is half of a week? That is 14 days. If I go to 14 days time frame, because if you subscribe to TradingView, you can check all those. If I go to 14 days time frame, it's possible all this structure, I still see them there yet. Okay. It's possible I still see all this structure clearly, or maybe 14-day structure, or maybe let me say 21 day. 21 days is 3 weeks. What am I even saying? Sorry. 7 days make a week, right? If I go to, let's say, a 4-day structure, rather, a 4-day structure, on a 4-day structure, I may still see all these things clearly. Is that understood? I may still see all those things clearly, on a 4-day structure. So like that. So majorly you can clearly see that. Then let's move on from there. So from this low right here to the highest high, I want to consider it as my own new weekly range. For you, you might think from this low to this side that you want to call it such that you now study. My chart is already rough. That is, I'm saying, for you, you may want to take your reference weekly time frame structure as this low to this high, this low to this high, this low to this high, this low to this high. Okay, you may want to call it that, but it is 3 drives that do complete a market cycle. Is that understood? So that's why I knew that when we'll be talking about market cycle, you understand why I'm saying I want to use this. You understand why I said I won't use this. okay, as the weekly structure. Is that understood? So majorly our weekly structure is this low to this high, this low to this high, then this low to this highest high. That is our weekly structure. So the internal structure one, which is this guy here, which is this one here, is a what? Is a daily structure. Internal structure two, which is this guy here, is also a daily what? Daily structure. So those are the two daily structure that we have. So then we can now break it down based on that. We have a breakout of, we first have the first market cycle. What was the first market cycle? We have a breakout of external liquidity. 4-hour structure follows. 4-hour structure follows. And then what happens? 1-hour structure follows. Market was able to retest 1-hour structure to continue structure. And then we have the ISI, which gives us what? A complete new week cycle. Then we have our daily structure again. The market breaks out of this again as BOS. Market breaks out of this again as BOS, external liquidity broken there. So what happens again? That means this is 4-hour structure again. 4-hour structure again, right? That one. After market now breaks that 4-hour structure, this tiny one you see here, this little one, if I zoom in, so these other two bases that you see here, these guys, let me give them another color. I'm coming, sorry. I expect, okay. Yeah, I'm with you guys. Well, let me just use this. Okay, so this other one, after market breaks this external liquidity here, which is our another 4-hour structure, then the one form, these two bases here, is a 1-hour structure again. Is that understood? So like that, like that, like that, like that, like that. So what do we now expect? So what do we expect now? What we expect now is that price can still use the 4-hour structure to continue what? To continue structure. And you can see this last base here, this one here, price causes an SMS. It's pushed price to the highest, but it couldn't break that high. Is that understood? It couldn't break that high. Is that understood? Now, this ISI marks the end of our weekly, what? Weekly structure. Is that understood? It marks the end of our weekly structure. Okay. Then we have this pullback towards the 1-hour structure, which creates what we call an SMS, a shift in market structure. It couldn't what? It couldn't create a higher high. And then market now came all the way, then raid what? Then raid the 4-hour structure. It's cleared it up. So after the 4-hour structure has been cleared, where do you expect market to react to next? Somewhere around the, sorry, this is 1-hour structure. Sorry. So somewhere around the 4-hour structure, which is this guy here. Is that understood? So somewhere around the 4-hour structure, which is that guy. So price was able to react to it a little with all this rejection and all. And then we have a failure. Then price came all the way, breaks the 4-hour structure here. So the next place you will expect is daily structure. That is the internal structure, okay? Even though I told you, even the daily structure, its own internal structure itself will also be another time frame. So like that, the price was able to use that one to create a what? It's kind of shallow pullback when we're talking about the part of pullback. Now, price now breaks daily structure. Now, since price has now broken daily structure, remember daily structure is more powerful than 1 hour or 4 hour. So all this 1 hour time frame structure and 4 hour time frame structure that are below, not the immediate ones. The immediate ones has the ability to be able to continue creating higher high, higher low. That is to continue range structure. But immediately we have a major higher time frame structure broken, like this major daily structure being broken here right now. Okay, so we already know that automatically all these previous 1 hour structure that held that structure and the 4 hour structure, which are lower to that higher time frame structure, will be what? Will automatically be broken as well. They will automatically be broken as well. And in fact, in that scenario, because here we have what we call breakout of external liquidity, though the break of structure major, this is where we have a major break of structure for the reversal type of break of structure. For our minor break of structure, this is where we have it, MBOS. MBOS. For the reversal break of structure. Remember, the break of structure we've been talking about are the continuation one. Okay, so here we already have the major external liquidity, which is the daily structure being broken. Or at times we call it the controlling demand. That is where market ought to use next to what? To create higher high. The moment market breaks this one, then you know that market is ready for a pullback into the weekly what? Into the weekly time frame structure itself. That is the major, the first one, which is this. This is the next one that now has ability to probably create a deep pullback or to reverse market back and give higher high. Is that understood? So automatically when price breaks the major external liquidity here, which is this guy, automatically when price breaks it, you already know that you are coming for the major guy here. You already know. And that is what do cause range structure. Because it is range structure that price will now use. This guy here, can you see it? This is a range structure. It's a range structure that price will now use to after market breaks external liquidity. At times, price can create a deep pullback. It depends on what is here. So I did believe that after market breaks this daily time frame structure and all, I did believe that what we have here, we still have some kind of maybe daily time frame structure or a major structure that actually has good strength. It's possible we might have a deep pullback. Don't worry, when we talk about pullbacks and everything, you will know when there will be a deep pullback, a shallow pullback, and what we call a complex pullback. But in this scenario, price use was a range structure to reach its final destination. And why would price create a range structure instead of a deep pullback in this sense? Is this. Let me tell you why. I hope that place is, please, hope other side is clear before I explain what I want to mean. Now, why price didn't create, that is, I want to explain why, though just a view of it, you guys will still do it as a major topic. After price break this daily structure here that you see here, I want to explain why price didn't use anything lower to it immediately to create a deep pullback. Is that understood? Because at times you will see after price breaks external liquidity here is to create a deep pullback. The reason is that this guy right here, this other new daily structure right here, didn't pull back into the last structure range. It was only using what? Lower time frame as mitigation to continue. And if it pull back into this last structure range, okay, after price break it, immediately price retrace deeper. After breaking it, immediately price retrace deeper into the last structure range. Price will be able to use that to at least create a deep pullback again. So all these lower time frame structures that held it before are now meaningless. They don't have the strength again. The only strength they have now is to be able to create what we call range structure. More topic on that will be discussed. So it was range structure that price now use a lower high, lower low, lower high, lower low, lower high, lower low, lower high. That price now used to come to the other major structure range, which is this. And that is where price found demand now and where price is now presently reacting to. I hope that is clear. Does that make sense? Hello, does it make sense? Hello, does it make sense? All right. So I hope you guys' eyes are getting opened now and you won't have to, yeah, definitely everybody needs to rewatch the video. So I hope you guys are getting it now. So I'll still show more example though. I'll still show more example. I'll still show more example. Now, that is the top-down idea. That was the what? That was the top-down idea of time frame difference. Now we want to talk about the bottom-up idea. Now, we've had an idea of how price build up. Okay, we've already had an idea of how price build up in terms of time frame difference. That is from a top-down approach, such that, you know, weekly structure got broken, creates a range structure. We know that the internal structure of weekly structure is daily structure. It's created a range structure for the range structure also got broken here, around there. And then that one also creates another range structure, which we call 1 hour. And then a new ISI is formed, which completes another new weekly structure from this low to this high. Hence, this new consolidation here will be also called, is now a what? A daily structure as well. This is a daily structure, this one here. And this as well is a daily structure. Then like that, then it got broken. And that one also creates a 4-hour structure here. 5-hour structure, that one also got broken, 1-hour structure. The 1-hour structure failed to create a higher high. So we first notice the typical type of an SMS shifting market structure here. So after that, what happens? Price raided almost everything. So that is a top down. That is from weekly structure, we see daily, we see 4-hour, 1 hour, weekly build up again, like that, like that, like that. So the next thing we want to see right here is what? Is this, the bottom-up idea. So what is the bottom-up idea saying? The bottom-up idea is now, if you are now trading, if you are what? If you are trading, number one, you first check your top-down idea. The top-down idea, we were able to see that, oh, when we break 4 hour, if you have a chance on lower time frame to sell from here, when we break 1 hour here, if you have a chance to sell from here, from a lower time frame, you can start targeting, what is it called? The 4-hour structure. That is, if you are selling, what I'm trying to say is that, let me zoom on again. After we have a BOS of 1 hour, you know, we don't need to go to the lower time frame since we now understand. We have a BOS of 1 hour here. So we have a BOS of 1 hour here, this one here. After the BOS happen, let's say on lower time frame, you have a chance to enter somewhere around there to sell. You know that you are now targeting what? The 4-hour structure, which is all this guy here. After the 4-hour structure also got broken, you know that if you are selling, you are now targeting what? The next daily structure here. The next daily structure got broken, you automatically know that all these ones are 4 hour and 1 hour respectively, as you have analyzed earlier. Okay, so you know that this will be broken. And when we're talking about when a range structure will be formed and all like that, you understand that the next step is range structure to be formed towards the next major structure, which is the next weekly major structure. Okay, I hope that is clear now. I hope that is clear. So that is what? That is that. Okay, that is that. So Price was able to use part of the entire structure and what is rewriting to. So if we now want to trade, let's say we want to trade, our trading, all these ones help us know our targets of our trading. Okay, it helps us know our target. That is the work of a what? Of a top-down approach. It helps us know that, oh, we have now broken maybe 1 hour structure. I can now start targeting 4 hour structure to take my next profit. Oh, we have now broken 4 hour. I can now target the daily to take my profit. Like that, like that. That is after we have entered a trade and we are targeting. That is top-down. Okay, that is top-down. Now, what is now the bottom up? In the bottom up approach of time frame difference is now that price, when you are trading from the lowest time frame to the higher time frame, from a lower time frame to a relative higher time frame. Okay, that is where you are trading to. If you are trading on what? If you are trading from the lower time frame to the corresponding higher time frame. Okay, so this is what you are trading when you are trading. Okay, for analysis, you do a top-down analysis. The first thing we did here was a top-down analysis. We know our goal, and we could now say that, oh, we could see why we are reacting to this demand and that it is a nice demand. Why? Because we know that we are back again into a major weekly structure, the internal structure of the weekly structure. So we know that we are back again into it. So after we know that we are back again into it, to now trade and join the buy, we have to now do a bottom-up approach, which means from the lowest time frame to the highest time frame. From the lowest to the highest time frame. However, without leaving out one for the other. Without leaving out one for the other. So how do you go about that? It is very simple. Your retracements as well are also the structure, in as much they have a structure range, are also the structure of your weekly. Okay, so for example, look at this right here. Okay, we have a break of structure here. Let's say this is all that weekly structure show us, where I zoom to like this. This is what weekly structure shows us. Okay, if that is what weekly structure shows us, let's say we did not see the left side and structure just starts from here. So we can gladly say that this is the major external liquidity here. This guy right here. So we can gladly say that we have had a BOS here, which is a major BOS. So if we have had a BOS there, how do we go about it? Since we have a BOS there, what is now this structure here? You know, from the high, now we are inverting. We are coming down now because we want to join this buy. So we have to understand what we are doing. From this high right here, I hope you know, in the inverse direction as well, same way we do the continuation. From this high to the external liquidity, in this sense now, I hope you know was our last, you know, in case of demand, our first weekly structure we look at was this. Second one was this. This is first. Sorry. This was the first one. This was the second one, right? And this was the third one. Is that understood? And that was the third one for the weekly structure. Okay. So which means for the third one, the low of the third one is this guy. And the high of the third one is this guy. The low of the second one is this guy. And the high of the second one is this guy. The low of the last one is this guy. And the high of that last one is this guy. Is that understood? So have you understood that? Have you understood that? Have you understood that? We now want to do a top-down approach. because we want to buy, and this is what we can see. So we can clearly see that this low is a weekly structure low, right? Like we said, that was the third one. But now in this scenario, because we want to sell, it's become the first one. It's become our first weekly structure from this low to this side, because we are now looking from upward downward. I hope I'm making sense. So this is, we now have a weekly BOS here, weekly BOS here, because we are now in a sell form. We are no more in the buy phase. So this was the low of our weekly structure. Now our weekly structure has been broken here, weekly BOS. So we've had the first break of structure on our weekly. In fact, I may choose to show everything here. It doesn't matter. But where we first have, based on weekly time frame, where we first have our weekly BOS, weekly major structure, is when we break the low of the last weekly structure range. Remember, our last weekly structure range is from this low to this high. So that is the first meaningful BOS based on weekly time frame. Is that understood? Even though we've been having smaller time frame BOS like this one here, is that understood? So we know that this one, like this one, okay, we've been breaking those ones, lows. But now we are interested in the what? In the weekly structure. The weekly structure low has now been broken. Interesting. Since the weekly structure low has now been broken, we know that we are now targeting what? We are coming back to target lower, and our goal is that is either we want to buy this as a pullback following structure again, because price may get there. You know, the price is now at the second weekly structure range, which is this. Is that understood? Which is this guy. That is the second weekly structure range. Our price is using the extreme of that. Remember, the second weekly structure range is from this low to this high. So price is using the last point of mitigation around the primary zone of that one to what? To react to demand. I hope I'm making sense. So the same way we know that this is our weekly BOS, is the same way we will surely know that this guy right here, this internal structure, is the major internal structure of that weekly structure. Remember, the weekly structure we are now dealing with here, structure range that we are not dealing with here, is from this low to this high, because we are now in the inversion state. I hope I'm making sense. So since that is what we have, then this means that this is a daily structure. This is our major internal structure. Isn't this glaring enough? So that means that is our daily structure. This guy right here is our daily what? Is our daily structure. Okay. Since that is our daily what? That is our daily structure. After price now broke from the weekly structure, and we know that our major internal structure is daily structure. Price now break weekly structure. Which structure is next? That means the first range structure that is formed, which is this guy here, let me give it another color, is 4-hour structure again as well. That is 4-hour structure. Then after this 4-hour structure now got broken, after this 4-hour structure got broken here, after this 4-hour structure got broken, okay, here, then price now created our 1-hour structure, which is this guy here, this one. This is now our 1-hour structure. Pink. I hope I'm making sense. So our 1-hour structure is now this guy here. So what did we now notice? Price now break not just 1-hour structure alone, impulsively, price break both 1-hour structure here to the upside, and also 4-hour structure to the upside, which is this guy. And also 4-hour structure to the upside, which is this guy. Since price now, it was after price now broke 4-hour structure that price now gave a deep pullback. Okay, price now gave a deep pullback back into demand. Remember, the general demand they are all reacting to is a daily time frame demand. I hope you know as well. So it's a powerful demand. So price now gave a deep pullback into what? into demand without breaking this low to the downside. So what does that imply? If we are buying from here, where will we be targeting? 1 hour structure has got broken. 4 hour structure has gotten broken, isn't it? So we will be targeting what? The daily structure, which is our internal structure. Please, is this not beautiful? Is it making a lot of sense and you are getting deeper understanding into how structure works in line with time frame difference? Is it making a lot of sense to you guys? Hello, are you guys with me? Hello? Very beautiful, right? So that is it. So yeah, we teach everything. I told you guys you will understand every move in the market. I'm sure by the time you keep going back to your chart and all, you keep understanding everything. So the same way idea we are using on this weekly in line with daily and all is the same way you can use from 15 minutes down to 5 minutes time to 1 hour down to 30 seconds time frame. It's the same way you can use from 4 hours. You can start your analysis from 4 hours. Then you know that the internal structure of 4 hours will be 1 hour. Then after price now break the external liquidity of that 4 hours, you know that the next structure you want to reference to is maybe 15 minutes. So if 15 minutes is the range structure, the first range structure, and price now breaks 15 minutes range structure, you know that the next range structure probably created is 5 minute structure. Is that understood? So that is how it works. So that is time frame difference. So we can now see price now reacts perfectly into our what? Daily structure. So price now starts selling. In fact, we can look for sales because we know that our daily structure might at least create a deep pullback, which is exactly what it did. So now this daily structure, this daily high that mitigates the daily structure now came all the way down here. But yet it couldn't what? It couldn't now break. It couldn't break what? Sorry. It couldn't break what? It couldn't break this. Did it break this low yet? I doubt. So it couldn't now break the lowest low, the lowest point of mitigation. It didn't break it. This low here. Can you see it? It couldn't break it. It now respects that demand beautifully again. Okay? It respects that demand beautifully again. So in as much as it respects the demand, it means that this high for now, by the time we'll be talking about strong high, strong low, it means that this high for now is a weak high, is weak. This high that you see here is weak. Price will come and raid it sooner or later. Price will raid it. Okay, and it has, when I teach you strong high, strong low, you will understand that this high has been confirmed to be weak because a high is not or low is not confirmed to be weak just because it didn't break something, but it's confirmed to be weak the moment it didn't respect the last point of order flow. For example, if this high still wants to be strong, this is what ought to happen. Price ought to get to this guy here, this last point of order flow here, and price ought to use that one to create a lower low first, to break this first, before now giving maybe a deep pullback into that high, before we can say we want to start looking for sell around that high. Is that understood? Before we say we want to look for sell around that high. So the fact that price didn't use the last point of order flow, and we know that this high initially didn't break the low that created it. So this was its last chance. This area here was the last chance for it to create that lower low before it's even create, before we can now say, oh, we can be looking around that extreme for a sell. But the moment that didn't happen, trust me, price will come and raid it. This low here will not be broken before this high here will be broken. But this is a weekly time frame. That is still something that may take long to that may actually take a whole long time to actually happen. Is that understood? So that is that. So categorically now I'm seeing this as a strong as a weak high because it didn't break this, and the last one of order flow, we couldn't use it to create a lower high. So what do we now have again? So number one, we first have a minor break of structure here now. Price has now broken this. Now, how do you even know the structure? All these ones here. How do you know the structures that they had to? It's for you to zoom again. Because you are on a weekly time frame, zoom again and understand what we have. If you zoom again, you will see that this high, this new high that was broken again, is a weekly structure high. How do we know? Because we have zoomed again, you don't need to zoom all this because our zoom is different. Our zooming in and zooming out is different. So it's just for you to understand order flow. So if I can zoom here, I say that this low has not been broken and all this my correction, they are weekly structure too. They are major structure range based on what price can show me now. It depends on what I am showing to you, which means that our weekly structure is this high to this low weekly structure 1, this high to this low weekly structure 2. I hope I'm making sense. So let's say I even didn't see this demand or something, I can still trade. Because here now, I know that weekly structure 1, which is this, I can now call that one a minor BOS. I can call that one a minor BOS. Weekly structure 1 has been broken. I know that I can now buy after price break this, either at the extreme, it could be at the extreme, price may come to the extreme area again, who knows, maybe somewhere around there. Okay, price may come again all the way somewhere around there. I can now buy confidently around this trend because this one has broken a weekly structure. I can now try to buy and now target the extreme. That is the what we call SC candle or the primary zone or the extreme area of what? Of the ISI of the weekly structure 1. So if this I2, I don't even need to see all this strong low thing that I said earlier before I even trade. I hope I'm making sense based on just time frame understanding alone. So I know that if this external liquidity high is now broken, which is my weekly structure confirmation, I can now, that is when I can now zoom in again to now start targeting bigger picture, maybe this extreme here, like that. So it is this beautiful. So that is how price build up based on time frame difference. So with this, I'll be able to teach you guys a deeper understanding into what we call time frame difference. Okay, into what we call time frame difference. Is that understood? So very, very simple stuff. Very simple stuff. Okay, very simple stuff. So let's say, for example, now, look at this. Let's say this is what price showed me when I open my chart based on this daily time frame. Let's say this is what price showed me. Okay, when I open my chart, this is what price showed me. So, okay, let's say, yeah, I'm coming. Let's say this is what price showed me when I open my chart here. So how will I analyze this? I'm on a daily time frame, Abi. So let me call all major structure range time frame from what I open here. Let me call them let me call them the structure of that time frame that I open, even though they may not be, but because I can see them from it, so I can assume it to be. So that's why I said a time frame reference is just a referential point, not necessarily mean that, oh, it is only that time frame that holds it, because a structure that appears clearly as a structure range on 4 hours can also appear as a structure range on daily. Do you understand? So that is it. It's just for you to break it down with reference to what you want to make understanding of. I hope I'm clear. So when as more daily show me this, then I can start assuming and start picking my reference point that from this low to this high as a structure range is my daily structure. Low to high, daily structure, low to high, daily structure, because I think this was actually a higher high. It's actually read this previous one. Yeah, it's read it a little. Can you see? Daily structure. So we now have three daily structure. This low to high, daily structure, low to high, daily structure, low to high, daily structure, which means what is now the internal structure of that daily structure? The internal structure before market raised the first external liquidity here, before market raised this, this internal structure, before market raised this external liquidity here, is what? That internal structure, I can now call it 4-hour what? 4-hour structure. You know, I'm just assuming. So if it's on weekly time frame that I start from, and those structures show on weekly time frame, I can assume them to be weekly time frame structure. I hope I'm making sense. So that is how it is. So the internal structure, or the internal structure, major internal structure here. Okay, sorry, the major internal structure is even just this. Just this guy. When we're talking about internal structure, you understand better. So I can call it 4-hour structure. So after market breaks external liquidity, the first structure that happened here, this first one here, this guy right here, I can call it what? 1 hour what? 1 hour structure. I can call it what? 1 hour structure. Green. I can call it what? 1 hour structure. Okay. So after market now breaks, sorry, they've brought light again. I want to plug my system because my gen didn't actually start. You see that there is nothing that beats, what is it called? There's nothing as beautiful as a this thing, as a good there's nothing as beautiful as a good network. Okay, so after price breaks this guy here, after price breaks this, probably let's say price breaks it here, let's say these two are the 1 hour structure, then all this structuring that properly mitigates each other, we can now call them maybe 15 minutes or even 30-minute structure. This one, we can call them 15-minute structure. Like that. This smaller one, you can call them, that happen after price now breaks 15-minute structure, you can call them maybe 5 minutes. 5, 1 hour, okay, 4 hour. Then the major one, daily. Is that understood? Sorry, the internal structure of the daily. Since these are structuring from this low to this high, the whole internal structure will be this. The major internal structure from that high to this low will be this. So then daily. So, if that is, sorry, the whole of that will be 4 hour rather. The whole of that will be 4 hour. 4 hour. So the whole pink zone is 4 hour structure, which is the internal structure of daily. Remember, daily itself is all the way from this low to this high. Even though all the internal structure of this, even in this inside one, that is the major minor structure here is 4 hour structure. 1 hour like that. So let's now break it down that way. So what do we first have? Price breaks 5 minutes here. Price breaks 5 minute structure here. Create a pull, this pullback. And if you are selling, the next place you are targeting is 15-minute structure. Okay. And what did you see? Price was able to use 15-minute structure, according to how we label it, to create a higher high. Can you see it? I told you, if it is in ascending order, they are powerful to create a higher what? A higher high. So after price creates a higher high, what happens? The last point of mitigation of 15 minutes is surely this. It's definitely here because this was the last place where price mitigated and then create higher high. So we don't even need price to reach this lowest low before we confirm our break of structure. Once price reach this next one, okay, this one. Now, remember what I told you as well. Now, okay, there's something I've not said. This new high that we form, I hope you know, is the new high of a daily structure, which means that this low that was even broken here now is not 15-minute structure again. This deep pullback is the internal structure. You know, we label it as the internal structure of the daily structure. It's the major internal structure here, which is now what? It is the major internal structure of where? Of this range, of this structure range, from this old low to this old high, which is our next daily structure. Remember, our first daily structure was low to high, first one, low to high, second one. So where we have this deep pullback and all, is now a new 4-hour structure, which is the major internal structure. So we know that in as much we've now broken a 4-hour structure, price has higher chance of, the moment we break this new 4-hour structure, price has higher chance of coming to raid all other smaller time frame structure down to even 1 hour. Even this 1-hour structure, price is still bearish, will be raided. This low, this lowest low of 1 hour will be raided. It may sell from where I mark here and create and break it. Okay, so we know that in as much this one has been confirmed as a new 4-hour structure, we know that the next, in fact, equal power structure that at least has equal power to that one is around this area, which is the next 4-hour structure as well. Is that understood? So which means if this one again is broken, 4-hour structure, internal structure again is broken, we are targeting now the extreme of this. So it means once we break this low now, this 1-hour low here, which price is still reacting to, okay, once we break it, let's say price sold from this my marked area, or maybe price go to the extreme, which is likely. I'm actually looking at the extreme for the bigger sell, but price can use this internal structure to actually create a lower low. So price, let's say price sell from here and come and read that 4 hours. So we know that the next one is, and come and read that 1 hour. We know that the next capable thing is the 4-hour structure. Let's say probably somewhere around its demand here. Is that understood? That can now create a more deeper pullback. So this was a 4-hour structure that was broken here. Is that understood? Based on all I have been saying since morning. So that brings us to the end of time frame difference. Any question? You guys have really taken a lot of my time. This is 2 hours plus into teaching you guys and other people to have classes. Any question, guys? Any question? Is it clear enough? Is it clear enough? Any question? Yeah, sure. We can use it. It can use the 4-hour structure. In as much it is a 4-hour structure that was broken. So it can use it because the 4-hour structure, remember, is an internal structure to daily structure. So it is inside a major structure. And normally all we have been analyzing is this. So the 4-hour structure can be used to create a bigger range structure. Remember, at the end of the day, by the time we zoom in, all of them basically are still range structure. That is the major external liquidity. You see that when I zoom in now, major external liquidity is actually this big guy here, but we didn't show it because I was trying to show you that it's possible not to look into too much details and still trade very well. So this is actually our major BOS, which means everything happening here. So price cannot use this internal structure. This is the major internal structure that we have. Price can come there and now use it to create a higher high, which will now mean that all this from here, like this, will now be a range structure, a bigger range structure that is create a higher high and still now come back maybe to the extreme and even still go higher. So it means that to this external liquidity, this major external liquidity, this bigger picture external liquidity, but we surely know that that is no more for this time frame. That must have been a weekly BOS or a monthly BOS, this one here, this bigger one. So it means that if price now use that 4 hour, based on the name we give it, which has equal strength as this first 4 hour that was broken, price can easily now use that to do what? To create a higher what? A higher high. Is that understood? Price can use that to create a higher high to cause a bigger range structure for the bigger picture. Do you get it now? I hope I'm clear on that. Are we clear on that? Are we clear on that, guys? So can you guys see the beauty of everything I've been teaching you? SMS is not for this class, bro. Is that understood? In fact, your higher distance, if you watch the last video of the older member, you will see that that was the last thing they did. So SMS is after you've even done after we've done structural inducement, after we started inducement. So there is a lot to do before I explain shift to market structure. So shift to market structure, the way we treat it, POI means point of interest. AOI means area of interest. So SMS is not for this class at all, because the way we do our shift market structure is not all this nonsense that people do around that they will just draw hem like this. It's not just about hem. Is that understood? So this being M does not mean that this I may just not be a mere liquidity. The price can still do something like this and still shift. So SMS has its own characteristics, and that is based on inducement and what we call Q base. Is that understood? So SMS is, you are not yet there. So any other question? Any other question before I call this class a quit? So I guess that will be all. Hope you guys enjoy the class. Hope it makes sense. Hope your eyes are open. Hope your eyes are open. Definitely. Why won't I enjoy it? It's what I have deep understanding of. So from how I've been teaching is, you can see that this is not cramming sense. Definitely, that's how you feel if you are in my class. I don't want to know your experience in trading. If I'm teaching you, everything I'm teaching you, I told you guys, is not common. That is an inner trading system. It's an inner circle trading system. I'm not talking about ICT now. I mean, it is an inner thing. Is that understood? So that is it. This person just is joining us. It's very, very late. Mr. Adiado, you are late though. Your class has ended already. We have started your class for the past 2 hours. Mr. Adiado, so you are late. So we are ending the class now actually. So you watch the recording. You are very, very late. We started since 6. All right. So yeah, so that will be all. You guys should take care and have a peaceful night rest.